Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, September 11th, 2022. Hope you're having a great weekend. We've got members of the media, academia, financial services, and government standing by to analyze all the news and events for the week. So sit back, relax, enjoy this episode of BRN Sunday.
Well, the same old story. Oh, turn some pages.
We're going to kick off the show with a look at what happened in the markets this week. Joining us online, he bookends the programming on the TD Ameritrade Network. We're talking about their lead anchor, Oliver Rennick. Oliver, so great to have you on the program. Thanks so much for stopping by.
Always appreciate it.
All right, Oliver, first week of trading in, I guess, post-Labor Day. So we've got a short and compressed week. Reactions, first thoughts, I guess, as you reflect back on the week that was, the short week that was.
Yeah. Well, I think that kind of worked for stock investors in itself, the fact that it was a short week, because the market, when it's in a long-term downtrend, fewer days you have to trade, the better. But ultimately what happened was you got a pretty nice little bounce and some strength in the second half of the week that was pretty impressive. And not a lot of big news flow this week. So it was a short week. It was a quiet week. And I think that was a good combination for bulls to try and reclaim some lost ground and just get some reprieve from the steady beatdown that had been happening from mid-August into September. And I think there's a few reasons for that. One of them is the bonds were fairly contained. The dollar broke out in a very big way earlier in the month, and it looked like that would lead the 10-year Treasury yield to do the same, but it hasn't quite yet. And so I think that was a little bit of relief from investors to see the bond market stabilize a little bit. Not a lot of signs that there is any potential for a turnaround, but more just a flirtation with the year-to-date high from back in June for the 10-year yield, and no big breakout. So without any revelatory commentary from the Federal Reserve or any big data points, I think that it was kind of a air pocket for the bearish trend, and we will see next week if the inflation number we're getting for CPI justifies the recent rally and strength here in this market.
Oliver, I want to talk about some interesting events this week. Most notably, obviously you talk about stock market, but most notably, and I want to understand how this impacts, if it does impact in any way, markets, not only here but abroad. We had the reported death of Queen Elizabeth on Thursday the 8th, and obviously after a 70-year reign, very sad, subdued UK. But everything you just described, how or does the market process this type of world event? She was a very strong leader, a strong person, was kind of the rock. And even though she didn't trade in the markets, or maybe she did, maybe she was online trading on TD Ameritrade. We don't know. That would be interesting. We'll have to find out later in her biography. But is there a reaction that we can see in market trends, maybe on Friday or Thursday when the news was announced?
Short answer, no.
Okay, well that
a cultural event, completely irrelevant for markets. But I guess give something for people to think about that's not the constant drumbeat of inflation data.
Yeah. I mean, it's just a really historical figure, so a big loss, and we share the grief of many in the UK. Oliver, let me ask you about return to work, and again, I'm asking you. Some of these are cultural But return to work, we've seen Larry Fink of BlackRock come out. We've seen Jamie Dimon of J.P. Morgan Chase come out, and if you take it, and Goldman Sachs, I think Solomon over at Goldman Sachs, they want people back in the office. What about this? Okay, post Labor Day, summer's over. Are the big banks and Wall Street, are they getting serious about returning to the office? They're going to put their foot down. And what does this mean more broadly to the markets and the stuff that you're covering?
Yeah, that possibly could have some impact if we do see a major shift. We had the CEO of GitLab on this week, software DevOps business, and he called it going from Zoom to the zoo. So going from the teleconferencing to the in-person office, which he sees as the zoo, which I thought was kind of funny and not surprising coming from a very, very deep, entrenched tech business like GitLab. But I think that anything that is resembling pre-COVID life is probably so far a negative thing for the market. The reasoning is that the more we move away from the constraints of the COVID era, then the less likely we are to get any type of government support, spending, all the things that made the stock market boom throughout COVID, which was the best time to be in the stock market ever. It's very important to remember that the global pandemic that we had and the shutdown that came with it was the catalyst behind the best rally in the history of the stock market. The best rally in the history of the stock market. Indisputable. And that is how we see the post-COVID world being a negative for stocks. It's just kind of the situation we're in right now. So if people start going back to the office, it means people driving. It means they're consuming oil. It means that they're buying oil. It's demand. These are all good things. I think most people can get behind normalcy and functionality of life as being a good thing. It doesn't mean we all have to be plugged in our, behind our desks, as little groundhogs in cubicles. I don't think we're ever going to get the same capacity, but the idea of coming into the office and productivity from that perspective, it does seem like even the tech CEOs know that they think it has something, that it does have some bearing on productivity, because when you start seeing some of the tech CEOs talk about bringing people back in, I do think that's notable. Yeah.
Yeah. What about, as you're talking, I think one way to entice people to come back is, people didn't want to give up their pajamas and their parachute or their bulky cargo pants. Maybe they just reduce or change or relax the policy for clothing. But could we ever see Wall Street banks go to business casual?
Wearing Lulu pants?
Yeah, well,
Maybe.
I don't know. I don't have any Lululemon pants. I'm not advocating for that, but I wonder if this will dramatically change the culture. People always, I think of banks, even though banks adopt fintech and things like that, I still think of them as, suits and ties and very buttoned up. And I think that's part of it. Going back, and you got to put the clothes on. Maybe you have to buy new clothes. Maybe you've been working out. And you went from I'm just talking about myself, you went from a 40 chest to a 44 chest in the last 2 years. So, that means you got to buy some new clothes. I mean, I think that's probably good.
In my case.
What's that?
Or a 30 waist to a 34 in my case.
Yeah, well, exactly. I think people just don't want to spend. But in all seriousness, I think you make some really great points about productivity. And what's the most productive? And I think we're going to have to figure that out. Not we, collectively, all of us, companies are going to have to figure that out. Last question before I let you go off into the rest of your weekend, enjoying your time in Chicago. I want to ask you about the Fed. And no news, good news, rate hikes, more hawkish Fed. What's your reaction? What can we expect post-Labor Day now that we're gearing up towards the end of the year from the Federal Reserve?
They seem pretty determined to apply the brakes on the economy, and the language is very, very consistent across all the speakers. Jerome Powell didn't have much to add in his discussion this week, on top of what he already told us in Jackson Hole, which tells us that he really means business in Jackson Hole. What he said is real. They are not going to stop fighting inflation until they see sustained downward trend in inflation towards levels that they're more comfortable with, and that's a very far ways away. So next week's inflation print, the market is now putting a lot of pressure on that to be a really encouraging good number and a big drop. So that'll be the big determinant of the market's short-term action, but it may not even be enough to dissuade the Fed from hiking 75 basis points in the next meeting later this month, which is generally what's expected now. That's the most likely event is they'll hike 75 basis points.
Yeah, and I didn't even bring up the silly season. Here we are, usually after Labor Day, it's the election, the midterms. We're not even going to dump into that now. It'll be interesting to see how this all kind of plays out because we do not know what the makeup of the new Congress will be in January. I mean, it could be the extremes, one party and taking over both houses, or a mixed party coalition or I don't know. My Constitution is not there next to me, but I think it's going to be interesting. Well, Oliver, we're going to leave it there. Really appreciate you stopping by the program. Enjoy the rest of your weekend in Chicago. We'll be tuning into the TD Ameritrade Network, and we'll talk to you again very soon. Thanks, my friend.
Okay, thanks, man.
Welcome back. Many of you remember last month we spoke to Congresswoman Eleanor Holmes Norton of Washington, D.C. to discuss the federal thrift savings plan transition to a new vendor. There were a lot of complaints, a lot of concerns, and I know she put forth a bill to discuss the Government Accountability Office looking into it, but she's also put it in a recent bill to establish an Inspector General, and she's joining us now to discuss the bill and a lot more. Congresswoman, thanks so much for joining us on the program this morning.
The same to you. Good to be with you.
It's good to see you. Okay, let's talk about when we last had you on about a month ago. We had talked about some challenges with the federal thrift plan that impacted so many of your constituents. Before we get into your new bill that you're sponsoring and authoring, have you received any additional complaints or concerns from your constituents?
Well, I continue to receive complaints. I think it's gotten better. The Retirement Thrift Board has to report to me every week, and I think that's having an impact. But we need to understand how this outrage occurred. That's why I have introduced a bill to create an Inspector General for the Federal Retirement Thrift Saving.
Yes, ma'am. And I'm sorry, I didn't mean to interrupt you. I was just going to ask you about that bill. And when we last spoke to you, you had asked the Government Accountability Office to do an audit, and that was kind of uncovering as to the who, how, why, all that kind of good stuff or bad stuff in this case. Why create an Inspector General role? Some of the folks who are watching this program may not be, and we don't need to go into a huge civics lesson. That's not my point. But what would be the purpose of this role?
Well, you're right that I've already asked for a comprehensive review by the Government Accountability Office. But this problem is so severe with people not being able to even get customer service, to find out what their account balances are, that to get to the bottom of it and to understand how in the world this happened and to make sure it will not happen again, you need something more cosmic than what we have, and that's why I've introduced a bill to create an Inspector General. Inspector General will do a better job at keeping the Thrift Investment Board accountable, and that's what we need.
Yes, ma'am. And There's a lot going on, obviously, in the Congress now, and you've authored and advocated for this bill. Do you believe that it will receive consideration during the remainder of conference? Of the Congress this year, or is it something that I know you have urgency? Where does it kind of fall on the agenda for the remainder of the Congress?
Well, actually, I think I have a good chance of getting this bill through. Of course, in this region, we have some of the federal employees, but federal employees are spread throughout the United States. So we're not the only ones who've been experiencing this problem. It's not a controversial bill to set up an inspector general. So I do believe that I have a decent chance of getting this bill approved during the lame duck.
Well, I certainly wish you the best. It's obviously an important step towards good governance and a better thrift savings plan. Congresswoman Eleanor Holmes Norton, great to see you. Thanks so much for joining us, and we appreciate you. Wish you all the best for the remainder of the congressional term.
Thank you very much. Pleased to be with you today.
Thanks, Congresswoman.
And that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to? But hey, drop us a line, and don't forget, for all the latest security news in lifestyle, wellness, finance, tech, entertainment, so much more, but all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website. That's www.broadcastretirementnetwork.com. And, of course, our over 300 streaming partners. We're back again tomorrow for another edition of BRN AM. We'll have a very special guest. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.